Hey, everybody. I'm Peyton, the COO of RaisePapers. I am joined today by Benji Jones of Smith Anderson, and we are going to talk through annual reporting. So for founders who have launched a campaign and they've been hearing about staying compliant and filing this CAR, Benji is here to help enlighten everyone on what that is and how to accomplish it. So let's start there. Benji, welcome.
The first thing I want to do, Peyton, because I'm a securities lawyer and everyone knows we're all about disclosure, is give a little bit of my own disclosure because that's what we're required to do. So what I talk about today is just a general overview of the rules. We're discussing the requirements, and nothing I say today should be construed as legal advice specific to your company. Rules can be complicated to apply to different facts and circumstances that can arise. So this is an overview. It's educational. I encourage everyone to call your attorney that helped you, or a qualified attorney like me if you have questions about your CAR requirements, or if you're trying to raise capital in the future. Okay, I'm done. That's it.
Great. So let's start with, I'm a founder. I've launched a campaign, let's say last year. And what is this CAR? What do I need to know?
Well, okay. So the CAR is the annual report that you're likely required to file with the SEC. So if you sold securities under any regulation crowdfunding offering, or are in the process of doing that now, then you'll be required to file the annual report with the SEC no later than 120 days after the end of your fiscal year. So for calendar year companies, which is a vast majority of our issuers, that date is April 30th. So the deadline to file your annual report would be April 30th. So I also just want to mention that if you have an ongoing offering right now and you want to extend beyond April 30th, you will need to update your financial statements in your Form C to bring them current. So financial statements that you were required to file in your first Form C, they go stale 120 days after the end of your fiscal year. And to make offers and sale under Regulation CF, under a Form C, you need to get those current. So even if you haven't sold any securities yet on your offering and you want to extend past April 30th, you're going to need to do a material amendment. So the kind of concepts of, financial statement update, and also recognize that if you're still offering, the financial statement requirements for your offering may be more stringent than the ones required for a Form CAR. So again, just be aware of that. So continuing beyond April 30th, an existing offering is going to require you to do some stuff and to file your Form CAR. If you've sold securities, then you'll need to do that as well.
Are there any companies that don't have to file a CAR?
Possibly. So all companies that have offered under Regulation CF are always required to file at least one annual report if they sell securities under CF. But unless the issuer has less than 300 holders of record of the securities they've sold, it has to file annual reports for at least 3 years. Then, if they have less than $10 million in assets, they can withdraw from the annual report requirements. But that requires you to file your annual report and then 5 days later, file a Form CTR so that you're telling everyone we're withdrawing. So if you haven't filed your Form CTR and you made an offer, you need to file your CAR this year. And then if you think you're able to withdraw, you want to file that Form CTR within 5 business days of filing your annual report. So everyone has at least 1 year. Most issuers have 3 years of reporting requirements. You got to look at the facts and circumstances. And if you haven't filed, in order to exit the system, you have to file a Form CTR 5 business days after you file your last annual report.
Right. Yeah, we get a lot of confusion with the CTR where people will think, oh, I met those requirements, so this year I can just file the CTR. And we're like, no, you have to
No,
file the CAR and then file that
it's
within.
it's a real it's kind of the a biggest unkept, a secret
Yeah.
that like it's in those details. So even if you filed, if you think you're done and you filed 3 and you didn't file your form CTR last year, you need to do this next CAR and then file your form CTR.
What is the time period that counts each year? So some people may have launched a campaign in 2022 and never filed. And so, or if I did one last year, it's kind of makes more sense that I'm filing now. So can you talk a little bit about the time periods and how to know what's applicable?
So think about this, one about kind of business updates. You need to look at it in one set of time frame, and financial statements look at it in another time frame. So the business updates, you're basically trying to update people about changes that have happened in your company, good things and bad things, since the last time you told them anything. So if the last time you told them anything was last April, when you filed your CAR and you're doing your next CAR, you want to provide them an update of what's changed through the date you file, or a date relatively close to the date you file. But your financial disclosures look at the past 2 fiscal years. So your financial statements will have a 2-year look back, or only a year if you've been newly formed. And your financial disclosures will talk about your fiscal year end. And then you might at some point kind of put a material update. Let's say that you raised some capital in February. You might want to say that in your financial disclosures, but the numbers are going to be looking at your past 2 fiscal year ends. So it's kind of when's the last time you told anybody anything about your company? Bring it forward to a date that is kind of now, because we're supposed to provide people material information about your company, right? And then do your 2-year look back for your financials.
So let's talk about what is required in the actual CAR. A lot of founders find the Form C process so complicated and long. And then, when they hear about having to do something else with the SEC, it's intimidating. So can you talk about what's required?
Yeah, so fundamentally, the requirements are update the same information that you had in your Form C, except you can exclude stuff that relates specific to your offering. So you don't have to discuss your target offering amount, your deadlines, the uses of proceeds, or the investment process, or the cancellation, or that intermediary information, but all of the kind of substantive information about your company, you need to bring current. So have you changed a business line? Have you had meaningful successes and established a partnership with someone? Have you discontinued a business line? So what's changed in your business? And then who are your officers and directors? You need to look back for the bios. You need to bring that current. Who are the 20% beneficial owners? Have you had any related party transactions with your insiders? Have you done securities issuances in the past 3 years? You probably have, because you sold some securities under Regulation CF. And then kind of your risk factor, that capitalization, what kind of indebtedness, all of that needs to be brought current for this Form C. It is this is what's happened since the last piece of information we told you. And then, of course, you have your 2 years of GAAP financial statements that need to be certified to be true and accurate by your principal executive officer, which is usually your CEO. Or if you have a review or an audit of those financial statements, you provide that. And remember when I was talking about if you're extending after April 30th, you might need a higher threshold of disclosure. That's a scenario where, because of the amount you're raising, you have to get that review or that audit done. So if you're doing that so you can extend your offering with unstale financial statements, those are the financial statements you would include in your CAR as well. Or if you have the audit or review for a different reason, you would include those as well. And then, of course, you also have that kind of financial disclosure, the description of your financial condition and material changes and trends known to management. That also needs to be updated. So it's really anything related to the company and its risks that wasn't specific to the process of raising a specific amount of capital needs to be updated. Fundamentally, if you've done one annual report already, you're just taking all of that information, reading it, and updating it for what the world looks like today. If you are taking your Form C and creating it to a new CAR, you'll be deleted some of that offering specific information.
Great. So when people hear material change or CAR, they should really think this is an opportunity for me to communicate to my investors, the public, the SEC. You know, this is what's gone on in the company, good or bad, you know, in a significant way, not just Bob got a cup of coffee, but like Bob left the company or something more specific.
Right, exactly.
Can you talk about material, like just that concept a little bit more?
Yeah, so first of all, I want to just mention that providing your annual report to a bunch of people who have invested in you that you don't have monthly or quarterly meetings with is really good investor relations, steps. It's really good to tell people, hey, this is what we're doing. Hey, this is what we're trying to do. This is what's worked. This is what hasn't worked. Because when you provide information, when you're proactive about giving people information, you will maybe reduce the number of questions you get for information. So it's really good kind of policy, even if you don't have to do an annual report and you've terminated, to give your investors an update of what's going on, okay? So what's material? So first of all, materiality in the context of a CAR is different than materiality from when you need to amend your Form C. So when we're looking at the CAR, we really are looking at what's important that we should tell people about, right? And materiality is also kind of based on the facts and circumstances of what we're dealing with. So when we're looking at a material amendment of your Form C, we look at whether or not there's a substantial likelihood that a reasonable investor would consider the change important in deciding whether or not to purchase securities. So amendments to your Form C that impact the financial condition of the issuer, like to add financials after April 30th, or to change the intended use of proceeds, or to change the price of an offering, that's usually definitively a material amendment. Changes in board structure, changes in who your officers or significant stockholders, significant contractual arrangements, those would also be material events. If I'm thinking about the past year or the past 18 months, what are our big wins? What are our big losses? What have we changed the company so that the risk profile is different? What happened from a management standpoint that's important for people to know and understand? Have we raised capital? Do we need to, where are we standing financially? Is really what we're looking at here. And then the concept of a material amendment is different because usually we're looking at that when you're actually ongoing an actual offering. So it kind of gets confused. Materiality there is really important because if you have to file a material amendment, people have to reconfirm their commitments if you haven't closed on those commitments, and can create some stickiness in your offering process. So we try to not need to materially amend. But the Form CAR process should be really let me take a chance to breathe, step back, and think about big picture, right? Look at my prior disclosure and is it wrong now, right? And if it's wrong now, let's change it to make it right.
Yeah, fantastic. Speaking of finances, this is one we get so much confusion, so many questions about what are GAAP financials, and is that just some people send in, tax returns, or they'll send us, their P&L only. Can you give a little more detail on the financial requirements?
Yes, and I'm at a little bit of a a handicap because I'm not an accountant, right? So, but I can share with you that QuickBooks are usually not GAAP financial statements. So your financial statements have to be prepared in accordance with GAAP. Now, they don't have to be reviewed by an independent auditor, and they don't have to be audited for your annual report compliance. They just have to be certified by your principal executive officer to be accurate. So you need 2 years, the most recent fiscal year. So in this concept, it would be December 23rd, and the prior fiscal year, December 22nd. And what you would see, one of the first things that these aren't GAAP financials is that GAAP financials do a year-over-year comparison. You see the first year and the second year on the same table. So you can compare how cash was at the end of 2022 versus cash at the end of 2023. Now, if you're a newly formed entity and you only have one fiscal year to report, you do only report 1 year so that you wouldn't have the year-over-year comparison. But one way to know is if I've been in existence for more than 2 years, do I have that year-over-year comparison? If you don't, you probably are not GAAP compliant. Then you also look at what are the actual materials that are being submitted. So you need a balance sheet, statement of comprehensive income, statements of changes in stockholder or member equity, capital accounts, statements of cash flow, and then you need notes to your financial statements that are prepared in a way that give more transparency to why cash is different, why general and administration has changed. And there's certain other accounting policies that you have to explain to people in your notes. So for lawyers, or maybe even the great paralegals that RaisePaper has, they can usually look at what you send in and say, this is presenting a red flag to me because, one, we don't see a year-over-year comparison and we know you've been in existence longer, or we don't see these 4 balance sheet, income statement, changes in stockholder equity, statements of cash flow, or we don't see any notes to financial, and those are red flags for us. So we say, you need to get these ready for GAAP. So the same process you went through for your Form C, you need to be preparing to go through for your annual report for every year you need to file.
Correct. And that's what we often, send people back to their accountant or who's ever doing
Yes.
or whoever assisted with their raise, because, you typically need to get your financials organized, depending, of course, on how much you're raising. But so it should just really, in ideal circumstances, it should just be like an update and a refresh.
Correct. But I think one of the things that folks don't always recognize is that the work they did to get ready for the offering, they need to continue to do from a financial statement disclosure to maintain their GAAP. So that transition can sometimes be challenging for folks. Another issue that I might want to just highlight for some folks, that if you have used a crowdfunding special purpose vehicle, so you've loaded all of your investors into an LLC that's formed for the purpose of kind of holding those securities specifically, you need separate financials and separate disclosures for that SPV, as well as what I would call the operating issuer. And that can be kind of tricky as well. So you need to make sure you understand whether or not you used a crowdfunding SPV in your process as well, because those financials need to be disclosed as well.
Yeah, that's a very great point, because a lot of people come into, some don't even know that they did an SPV.
Yeah,
And so it is important. And usually they're obviously a lot more simple, but they're still have to be part of the CAR.
that's right.
So-
And the same disclosures that you might make for your company, you also do for the SPV, but they get reduced because it's a holding, it's just it's a conduit. So, you know, its business is to do nothing other than hold the shares, right?
So the CAR, it's not optional, but some
Correct.
people, maybe they didn't have a very successful raise, or they did, and their company's struggling. A lot of these companies are startups. And so what happens if a CAR is not filed with the SEC?
So if you don't comply with your annual reporting requirements, you may not use the exemption going forward. Okay, which means if you are one of those issuers that are intending to continue an existing offering going forward, failure to file your Form CAR means that you don't have a legitimate exemption for the offer and sale of those securities, which presents problems, right? So, and the problems, if you don't have a qualified exempt offering, you've got potential rescission rights from your investors. If you sell, the regulators could come after you. You could have enforcement actions and all those bad things that would make you a bad actor. That means that you couldn't use any exemption going forward. But under Reg CF, the rules give you the ability to go back and historically fix the mistakes. Now, there's still a little kind of swampiness and what does this really mean? But if you missed your CAR last year, it is best to try to get that CAR fixed and this CAR done before this deadline if you can. And remember, you're going to need those financials that you needed for last year along with this year. So it's just recommended, if you are not compliant, you may not use this exemption going forward, and you may not use Regulation A. And you would probably have some significant disclosure issues if you're trying to raise capital under Reg D. So I know it's hard, but raising capital comes with compliance costs. And this is one of the compliance costs that Regulation CF has involved with it.
Yeah, and it is very important. And that's why we offer our CAR, and we offer it for a great price. And we have a paralegal assist you, hold your hand through the process. And then we have our network attorneys who can do the review of the CAR before it's filed. So the deadline is approaching. Benji, is there anything else that we didn't touch on? I feel like that was pretty comprehensive and very helpful. I think that was really a lot of it needs to be really in layman's basic terms, and that's what confuses people a lot of the time. So that was really, really helpful. Thank you so much.
I'm glad.
Yeah. All right. Well, it doesn't look like we have any questions, so that must mean we did a great job.
Good.
Thanks, everyone. Reach out to support@raisepapers.com if you want to follow up with us. Otherwise, hopefully we'll work with you. And thank you again so much, Benji.
Great. Talk to you guys later.